Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise.
What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with a very special guest, Matthew Sullivan. How you doing, Matthew?
Thank you, Cam. Great to be on.
Yeah. So, you want to give the listeners a little background of who you are or what you do?
Yes, thank you. So, the company I run is QuantmRE. Which is a blockchain-based real estate company. So we're one of the new breed of companies that is moving traditional enterprises onto the blockchain. So what we do really is a number of things, but the key issue is that we are creating a cryptocurrency that's backed by real estate. At the same time, we're enabling homeowners to release equity in their home without taking on more debt. And at the same time as that, we're creating a marketplace that enables people to buy and sell fractions of real estate without having to have deep pockets and without having to worry about liquidity. So how's that for starters?
That's pretty good. And I think that when I was doing some research on QuantmRE, I thought that it was a real interesting concept that a lot of people should at least know about. You know what I'm saying? That they, because I like to have options. You know, if I have equity in my home, I like to have the option of, you know, taking out a home equity loan. But right now, that's kind of, I think, all you can really do. And this is another option that people can look at doing also. You know, they can make the decision if it's the right fit for them or not. But that's why we're here, right?
Well, that's the thing. See, there's a whole set of reasons why we chose equity in people's homes. But if you think about it, if you own equity and the only way, I mean, let's say that you've been paying a mortgage down for 15 years or something, you would have built up a fair amount of equity and you've paid down your mortgage and you've done everything that everyone said you should do. And then let's say you're sitting on $100,000 worth of equity. Then you say, great, how do I unlock this? Well, the only way you can do it right now is to go back to the bank and say, can I borrow more of your money so I can have use of some of my money? And the bank say, sure, as long as you qualify or as long as you've got the right credit score, or as long as you've got the right income. So for many people who don't qualify or simply don't want to borrow more money, we're a solution, because we say what we'll do is we'll buy that piece of equity from you. And then when you sell your house, which could be in 30 years time, we share in the proceeds of the sale. And in the meantime, there's no interest payments, there's no monthly payments, there's no additional debt. So that's where it's sort of slightly different. So that's where, and what the blockchain enables us to do that. So that's why it's, I think everyone's really heard about blockchain because of cryptocurrencies going up and down like a roller coaster, but there's far more to the blockchain than that. And what the blockchain enables us to do is to do things like help people release equity or locked up money in their homes without taking on more debt.
Right. So I'm glad you mentioned blockchain and crypto, because I would like to know, and I think people would like to know, what role does that play in your company? I'm assuming it's a big part of your company because that's how you are releasing or giving people the equity, right?
It is. I mean, blockchain is a critical piece. I mean, blockchain is a very early stage technology, and because of that, it's incredibly exciting. But it's actually quite a revolutionary piece of technology. And I remember the first time I heard about blockchain was, 4 or 5 years ago, when I went to a crowdfunding conference, and Tim Draper was talking about how exciting the developments in the blockchain was. And of course, I, along with everybody else in the audience, sort of went onto their phones and Googled blockchain, and it started talking about a distributed ledger. And we were thinking, well, we've probably Googled the wrong blockchain, because surely this can't be it, because this doesn't sound exciting at all. It's a distributed ledger technology. I mean, what does that mean? But the reality is that what blockchain enables us to do is to create a layer of truth, which means that if you can have a system where you can't fudge the numbers, or you can't delete records, or you can't change information, that saying, there's lies, damn lies, and there's lies, damn lies, and statistics. So if you remove that, then you've got a system where you can actually begin to trust it. So to answer your question, blockchain is a critical part of our business, because what it does is it allows us to record transactions in a way that it creates this element of truth. In other words, people can trust all of the transactions on our platform. And that allows us to do a very wide number of things.
So so you mentioned blockchain. There's blockchain, crypto. So those, let's just get that straight. Those things are two separate things, correct?
One sits on top of the other.
Right.
So blockchain is the foundation. So blockchain, if you visualize a series of blocks, one after the other, and the way that blockchain works is that it is obviously it's a chain of blocks, but each block contains a certain amount of data. So it's not very much, it's not huge amounts. It's it could be a megabyte or something like that. So, and that data is encrypted, and it's wrapped in this layer of encryption, which is called a hash. And each block contains information about transactions and other things. But in addition to that, it includes information about the hash, or the cryptographic code of the previous record or the previous block, and it also includes information about the block in front of it. So it's this daisy chain effect where each block really has a record of what's in front and what's behind. So the important thing there is that you can't go back and change something historically, because then it changes everything in front of it. And so that's so in other words, you can change it, but people know.
Right.
So in other words, so you can't sort of, you can't sneak into the database and change a few records here, because everything then changes, and then everything becomes invalid. So the blockchain is that record or a ledger that is, and people use the word immutable, which means you can't change it.
Right.
Now, on top of that, cryptocurrencies, what they do is they use the blockchain to be able to move value from one holder to another. Because remember, in each block, we have information and data. And what cryptocurrencies do is they put data of the transaction into that block. So cryptocurrencies, it's really a program that says, if I send you some information and you put it in your electronic wallet, if you send that same code or a piece of that information to somebody else, the blockchain will record that. So it's a bit like a large bank statement that says that this bank statement says on this date you moved this value from this person to this person. So cryptocurrencies sit on top of blockchain. So they're two separate technologies, but one needs the other.
Right. So as far as QuantmRE, let's say I have some equity in my home, and I'm like, hey, I want to use your service to tap into that equity. Okay, and now let's say I tapped into 50K, right? So I have 50K. Now I lose my job. What happens?
Well, the good thing is you still keep the 50K, and because it's not debt, we're not going to be knocking on your door saying, Cam, where's the interest payment? Because what you've done is you've sold us something that you own outright.
Mm-hmm.
And that's the equity in your home. Now, the bank might have other questions to ask, because they're going to want their mortgage payments.
Right, yeah.
But the good thing is, if you've just released 50K, you could use some of that, because it's your money, to pay down your mortgage. So the banks actually like us, because what we're doing is we are sort of protecting their asset, because we're not increasing the debt in the home. We're allowing you to tap into some of your equity without taking on additional debt. So the bank's mortgage stays the same. You don't owe us any money by way of a debt. And now you've got $50,000 in the bank. So you can start sleeping at night because you know that if you get something out of left field, you'll be able to pay for it, and you don't have to pay that 50,000 back until you sell your house.
Right. Okay.
But the crypto thing, another question we get is are you going to pay me in crypto? And the answer is, well, we can, but most people like dollars. So we will pay you $50,000 in dollars because you think, well, I don't really understand this crypto blockchain stuff, but I do understand that there's value in my home. So we'll pay you that. But the interesting thing is, where do we get that $50,000 from to pay you? And the way that happens is, one of the biggest issues in cryptocurrencies is the volatility and the fact that, as I'm sure everyone has noticed, cryptocurrencies are rather unpredictable.
Right.
And the reason for that is they're not based on any intrinsic value. So if someone said to you, what is Bitcoin worth? You say, well, today it's worth this. But no. I say, what is it? What's it built on? What's it worth? What's it based on? And that's the place where people start scratching their heads and saying, well, I don't really know.
Right.
And that's why it bounces up and down, because people, it's only worth what people are willing to pay for it. So we created a cryptocurrency that's based on real estate assets, and the real estate assets it's based on is the equity in people's homes. So we take all of these pieces of equity, we put them into a pool, and we then create a cryptocurrency where each cryptocurrency, each token, each unit is based on or underpinned by a fraction of those real estate assets. So that if you're using our cryptocurrency to pay for something, or you're buying our cryptocurrency, that it's based all the way down the line. It's actually based on something. And I think that helps it sort of smooth out a bit.
And you have your own coin called EQRE.
That's it. Now we're still building all this, because as you can probably imagine, this is quite sort of complicated stuff to build, because there's all the technical stuff, but in addition to that, there's all the legal, there's all the regulatory, there's the security laws, and then there's all the security in terms of how do you build something that deals with people's data. And so there's many layers. So we've got a pretty large team working on this. So the token EQRE, you're absolutely right, won't be live probably until the end of the first quarter, maybe second quarter next year. But that's exactly it. So we're creating our own coin, and that coin EQRE is based on the quantum real estate pool of assets.
So when they tap into your okay, let's go back to myself. Let's say I want 50K, right? I tap into my home equity, I get the 50K. So I'm not actually leasing anything to you. It's just
no one's going to turn up and say they want to stay in your spare room.
Right. Yeah, I got you. That's even if you did, I talk it over with my wife to see what she said.
You let us in. I know you're a great guy. I mean, yeah. It's not in the contract, but since you asked, come in.
I just want to let the viewers know, and for myself also, I guess I don't understand how you make a profit. So if you would make the profit when I sold the house, I guess.
Yeah. So what happens is, we're a co-owner with you. We're not a co-owner. There's a legal description. So what we're buying is and this is where the answer to your question comes in. We're buying the future appreciation rights of your property. So what we're saying is we're partners with you now. So if the value of your house goes up, then we'll share in that profit with you. And the reason we like houses is because we can predict, pretty much, because there's so much information about house prices, and there are so many people writing about house prices, and it's a fairly well-known asset class. So we can use lots of models to predict, not accurately, because no one can be that accurate, but we can get a rough idea where we think properties are going to be. So because of that, when you sell your home in, say, 5 years' time, that piece of your home that we agreed that we would share in, that will have gone up in value. So when you sell your home, then we get our original 50K back plus a percentage of however much your house has gone up in value.
So this is just like, I'm just going to throw out any company. Let's say Uber. If you were an early investor in Uber, let's say you invested, 10K in Uber, obviously that 10K right now, whenever they go public, that 10K probably be worth, 400,000 or something like that. So I get it now. I get you now. So are there any fees involved if I were to, tap into?
Yes. Yeah, exactly. So it's very similar to a loan origination fee. So we charge typically around 3%. So we charge the homeowner 3%, and that's a once-off payment. And in addition to that, there's an appraisal fee. And again, we haven't launched this to the public yet, and it probably won't be launched until early next year. But the team behind it has a huge amount of experience. So our equity release or equity sharing team has a huge amount of experience over the last 10 years. And in fact, is probably one of the most experienced teams in the United States doing this. But again, it takes time to assemble this. But to answer your question, it's a 3% fee. So of your $50,000, we would have a $1,500 fee, which is a once-off fee. So we would give you $50,000 less that fee, but then there are no other fees on top of that, no monthly payments, there's no interest.
Right. That sounds pretty good. I mean, now what if I'm just asking a bunch of questions because this is new.
This is your show. Yes.
This is new, and I've never heard of it until last week, and I was just looking into it. And what if I never sell my house?
Yeah. Well, that would be a bit of a problem for us. So we do say that you've got 30 years. And then after 30 years, you have to find a way to refinance or pay. You need to get us out, basically. So you can either sell your home or you can take out. You need to refinance it. But we figured out historically that 30 years is quite a long time.
That is.
And so it's quite a lot of notice. It's not like 4 weeks notice. It's like, here's $50,000. Now here's 30 years notice when we want it back. So we figured that's a good deal.
Right. And it's not like you have that would only happen if you don't sell the house. Most people would sell a house within, 10, 15 years. And then that's the exit strategy, basically.
Exactly. And I think the average hold time is around 7 years. So exactly. I mean, occasionally people hold on to it for a long time, but it's really a tiny percentage of the overall pool. Right.
So as far, I know we're kind of bouncing a little bit.
No, good. Yeah, it's all related. It's all fine.
As far as crypto, right? So I know you're creating your own coin, things like that. One thing that I've been looking at, paying attention to is, okay, so crypto around, October, November 2017 was really hot,
Yeah.
And right now, I feel like it is really, well, it's not really cold, but it is on the warm side, right? So where do you think the future of cryptocurrency, where do you think that is going? Do you think that, that is something that's here to stay? Or is that something that, will eventually, something else will take it over? Like me, my thoughts are, I would think that it's here to stay with an asterisk. So it's here to stay, but right when the government, like the overall government, comes out with their own coin, at that point, these other ones will be kind of like washed away. Is that how you see it?
Well, I think it's definitely here to stay, and I am in a very lucky position because I'm so busy building QuantmRE. I don't have a second to look at the markets. And if I did, and I haven't invested at all in other currencies. And the reason for that is because I think they're at such an early stage, they are purely sentiment driven. So in other words, there are very few fundamentals. There are so many changes happening to the marketplace. It is impossible to invest based on fundamentals. If you're investing in the crypto markets at the moment, it is purely speculation, and it is driven by sentiment. And I think all these people talking about stochastics and applying various charting methodologies, I think it's very difficult to do that because of the lack of historical data. So even these sort of chartists who are looking at and trying to be predictive and applying predictive analysis, I think that is actually flawed because of the lack of historical data. So the markets at the moment are very speculative, but the markets, as we talked about before, the cryptocurrencies is unrelated to the advance of and the usage of blockchain technology. So cryptocurrencies are going to bounce all over here because it depends on people, how they woke up in the morning, how positive they feel, how negative they feel. But blockchain technology advances at a furious rate. And the other thing is, as far as the government are concerned, my view is what they're really caring about is how do we avoid people being taken advantage of? How do we avoid fraud?
Yeah, right.
What we don't want to do is create a situation where we destroy a free market, because that's not how America works. But I think the most important considerations of the regulatory bodies is how do we avoid fraud, criminal activity, money laundering, and all of the issues really associated with the movement of currencies right now. So, and I think it'd be great. I mean, if the dollar becomes a currency on the blockchain, then I think that's a natural progression, and I think that would be fantastic for the market generally, because everything I think will move onto the blockchain. The idea of walking around with pieces of paper in your back pocket that's a technology that's probably coming to an end quite soon.
Right.
And I think so. This is the trigger that's going to really make that happen.
Right, man. I have so many questions after you said
Well, the
that.
good thing is we're on a show where you're the host, so far away.
Well, I want to keep it within a certain time frame. I try to keep it within 30 minutes. We're about 8 minutes left, so
I can speak fast.
Okay, I'm gonna ask you this one first, and hopefully I don't forget this next one. How do you lose money doing this? So can someone like me, I'm using myself again, I want the 50K. How does it turn to be into a bad deal for me? Because there's always some type of bad deal that can go down,
Well, no, you're right. In any transaction, there's winners and losers. So what we're doing is we're saying at this precise moment in time, we will value your house at a certain amount. We'll send an appraiser around. So we both agree that your house is worth this value at this point. We buy a percentage of the future appreciation at this point. Those things are all set in concrete at that particular date, at that price. Nothing changes there. Now, the way that you lose is if your house goes down in value, you lose because your house is worth less. But the amount that you have to pay back to us does not increase. In other words, there is no trigger mechanism where we go, Cam, clause 19.4, you now owe us $100,000. So it's a partnership. So we win because we think that we're clever enough to be able to buy into your home at a point where it's about to go up.
Well, do you buy into any home, or are there some homes where you're like, nah, man, I'm not getting into that?
Yeah, you're right. So the difference is that we underwrite these different to the way that a loan would be underwritten. So in a loan, you underwrite the property and the borrower. We primarily focus on the property itself. So there are some areas where we think these areas are probably not going to appreciate. So for us, it doesn't make sense to buy into a market where we think it's about to go down, because we will lose money then. So this is not a product that we can make available to everybody, unfortunately, at the moment, because we have to be very careful about trying to pick those properties which we think will go up.
Okay, so I remember my question. How long does it take for someone to get their money? If they I'm using me again, 50K, I do it today. When would I expect to see that in my account?
It's about 3 weeks. There's a process. There are parts of what we do tap into the house purchase process. So we have to send a guy out to do the valuation. So there's the appraisal process. So that takes, that could take a week or 10 days to line up. Then there's various forms that go backwards and forwards. Now, depending on how computer savvy you are, some people that we deal with prefer dealing in paper. So there's a few delays going backwards and forwards. Now, historically, these transactions do take about, let's say, 3 to 4 weeks, typically from the date you fill out the form on our website to the date that you get your check. And I would stress that we're not live yet, but this information is based on what our team did over an 8-9 year period where they released the equity on around 3,000 homes.
Okay.
So we've got some good experience in this sector.
Right. Okay. So I want to hop back about 2-3 questions ago. You were talking about crypto and things like that. And I'm glad we're towards the end of the show because we try not to be, kind of like conspiracy theorists and things like that. But this does, I think I should be able to ask this question, right?
Of course.
Do you think that we're moving towards New World Order, one currency type deal?
No, absolutely. Quite the opposite, in fact. I think we're going to end up with thousands of currencies. But what will happen is those currencies will all be interchangeable in the blink of an eye. So your phone, for example, will have an app that will imagine foreign exchange. So let's say that you've got a bunch of dollars and you want to buy something in euros. You would have an app on your phone that takes the dollars from your account and pays for the thing in euros. Mm-hmm. So imagine that but in crypto, it's much easier to do that. So I think what will happen is that there'll be maybe a small number of core currencies. I mean, Bitcoin, for example, is a core currency, but I think there will be thousands of different currencies, depending on different countries and different industries and different interest groups, because people will be paid or incentivized in a particular type of cryptocurrency. But they know that cryptocurrency will be swappable, if that's such a word, for another currency instantly through an application that will probably reside on their phone, for example. So in other words, you could have an account with 50 different types of currencies, and you could go in and buy a TV from Walmart, for example,
right,
and it would pull, some currency from here and some from here and some from here, and it would deliver, half a Bitcoin to Walmart.
Right.
Because it would move all these and swap it instantly. So I think that's what will happen. So I think, and those currencies will become smart currencies as well. So it's not just transfer of value. So I think money itself is going to change. I think that's the real difference, that the way that we see and the way we view money over the next decade, and that's a very long time in this space, but I think that's what's going to change most fundamentally.
I have to 50% agree and 50% disagree. Now, I agree with the last point.
That's known as sitting on the fence.
Well, the last points you made where, pulling different things from different places and then just, using it as one, I agree with that. But I don't agree with there's going to be thousands of currencies. I think that eventually somehow, and I don't know how, I just think that somehow, okay, with the rise of blockchain, crypto, just the regular dollars, globalization, there has to be an easier way to pay for something, right? There has to be.
I think you're right. Yeah. I think what will happen, though, is it will all happen behind the scenes, because at the moment we're focused on dollars, euros, yen. But I think what will happen is money will just work behind the scenes. You won't think of it as, I want Bitcoin, or it'll just be a transfer of value, and it'll be very much where and you're probably right, actually, there probably will be one sort of unit, but that unit will be made up of all sorts of different, and so in other words, yes, you're I mean, that I could see that could happen as well. But I think what'll happen is that all of this will happen behind the scenes, so it won't be anything like the way that we treat money at the moment.
Right. Okay. I think this whole thing is interesting, especially with QuantmRE. When you're ready to launch, you say Q1, Q2 next year. Yep, man, I would like for you to come back on the show
No, I'd love to. Thank you.
and talk about it. Because, like I said, it's all about options, and this is another option versus just going back and tapping into home equity and things like that. This could work out for some people, and without doing a ton of research on it. Like for me, I feel like it could work out for me. You know what I'm saying? So
it's good. It's a new approach. I think it's much fairer. What we talk about in our sort of mission statement is all about a freedom movement. It's about people being free to sort of tap into what is theirs without having to be constrained by existing mechanisms. So you're absolutely right. This is a much better, it's a much more equitable way of being able to tap into money that's yours without having to go back and get deeper into debt. For us, debt is the enemy.
So you want to let people know where they can find you, follow you, give out some of your social media information, things like that?
Love to. Thank you. I mean, the name of the company is QuantmRE, which is QuantmRE. And we're at QuantmRE.com. We also have a Telegram channel. We're on all the social media sites. But if you go to QuantmRE.com, we have a temporary site there at the moment. That's all going to change in the next few weeks. So go in, stick your name on our list, join our Telegram channel, and keep up to date with what we're doing.
Right. What about where they can follow you? Any handles, Twitter handles, or anything like that?
It's all. I think if you just stick QuantmRE into the Google nator, they'll all pop out. We're at QuantmRE on Twitter. We're on Facebook, LinkedIn, as I said, all the usual suspects.
Right, I got you. And as usual, everyone, they can follow me at Camboni11, CAMBONI11. That's on everything. If there's any social media site, it's Camboni11 on everything. You know what I'm saying? So you can follow me there and make sure that everyone out there request to join our Facebook chat. We talk about a lot of different investments in there. And also, like and subscribe to our YouTube channel that we just set up. So yeah, just hit us up and stay in contact. So Matthew, thank you for coming on, and don't be surprised, man, if you hear from me in a couple months and I'm like, hey,
Cam, I would love to. It's been such a pleasure talking to you. Thank you for having me.
All right, thanks. Till next week. Peace.